Now, when you earn income on your own, when you're self-employed, you don't have any withholding and you don't have payroll pulling out your Medicare and Social Security payment, your federal income tax, or your state taxes out of any of the money that you earn, right? And so just by virtue of not having an underlying mechanism like payroll, your taxes are simply more complicated. It's not to punish you. It's not because anybody hates you. It's just payroll doesn't exist, right? The mechanism is not there. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're a creative or soul-centered entrepreneur or wellness practitioner who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello. Today, I want to talk to you about something that I realize is really obvious when you're a person who deals in taxes all the time and teaches taxes, but that when you are just, living your life, running your small business and getting income, might not be obvious even at all. So today, what I want to talk about is the difference between 1099 or freelance income and W-2 income, and why it is so important to keep those two things separate. All right, so let's jump in. So one of the key things that I teach when I am teaching a university or a professional development group about how taxes work is I do a sort of side-by-side comparison about how withholding works when you're an employee and receive a regular paycheck or you have all your income reported on a W-2 versus how taxes work when your income is earned freelance, right? Through self-employment, right? So the major difference between those two things is that when you're an employee, there's payroll, right? There's this mechanism riding underneath the payment and actually federal law mandating that the employer is setting aside 7.65% of your pay to go to Medicare and Social Security. And then also your employer themselves out of their own pocket is paying 7.65%, a matching amount to the amount that's being taken out of your pay. They're matching with their own funds and paying into your Medicare and Social Security account, right? That is one of the major mechanisms of payroll. That is mandatory. On top of that, there's federal income tax that is withheld from your paychecks. Of course, that's from your own income, from your pay. And your employer doesn't totally know how much to withhold for federal income tax, unlike the Medicare and Social Security, which they know because it's 7.65% of your pay, like easy, simple math. The federal income tax, they don't know how much withholding to have because your federal income tax rate of taxation is going to be dependent on factors that your employer can't see, right? Do you have another job? Are you also self-employed and make money that way? Are you married to someone? And what kind of income does your spouse who you filed jointly with make? All of those will raise or lower your federal income tax obligation. And this is why when you're an employee, you fill out a little piece of paperwork called a W-4 to indicate to your boss how much federal income tax withholding should be taken out of your paychecks, right? We live in what's called a pay-as-you-go tax system, which means when there's payroll, right? So for all employees, it's mandatory that an employee is having their taxes paid in every 2 weeks, right? Every pay period, so that employee is paying taxes, 26 times a year. And by the time it comes to the tax deadline, it's not really a stressful experience because usually they've overpaid by a little bit. And the tax return is just a settling up, right, of what you projected that you owed, what you had actually withheld, and then you reconcile this with what you turned out to owe when you go through all the credits you're eligible for, any like bonus money that you or your spouse got through the year, etc. Okay, so that's how it works when you're an employee and when there's payroll, which is the beautiful mechanism that makes it all automated and simple. Now, when you earn income on your own, when you're self-employed, you don't have any withholding and you don't have payroll pulling out your Medicare and Social Security payment, your federal income tax, or your state taxes out of any of the money that you earn, right? And so just by virtue of not having an underlying mechanism like payroll, your taxes are simply more complicated. It's not to punish you. It's not because anybody hates you. It's just payroll doesn't exist, right? The mechanism is not there. And it couldn't be there. Let me let me skip over the fact that you can choose a different tax entity and you can put payroll there. Like, yes, you can, but by default, payroll is not there. And the thing is, no one who's paying you when you run your own business and you accept payment for your products or services, the people who are paying you money, they can't subtract your deductions for you because they're not the ones paying for them, right? You are entitled to take deductible expenses of running your business out of your taxable income. And so you have to be the one who tracks all of that stuff. There is no other option. There's no other party, right? You take your payment from your client services or your products, whatever it is that your business makes money from. And then you spend some of that money on your office and on your materials and or on education, continuing education credits you need to retain your license, whatever it is that you do, right? All those business deductions you subtract out of your gross income, and you're only taxed on the difference. You're only taxed on the profit. So right there, I hope that illustrates for you the fact that you need bookkeeping when you're self-employed. You just need it, right? If you don't want to do bookkeeping, technically you don't have to, right? Technically, you could just pay tax on all the money that you bring in your business and not subtract out any of your deductible expenses, right? You actually can do that. You're entitled to do that. You don't have to take the wonderful deductions you're entitled to, but I recommend you do. And if you're going to, you have to track them the way that the IRS requires you to track them. So that means you have to keep your receipts, you have to keep your IRS documentation. So whether that's a mileage log or documents about the square footage of your home office, you have to follow the rules that the IRS sets out. And the privilege that you get for tracking them the way the IRS requires is that the IRS generally leaves you alone and doesn't ask to see the proof of them, right? You have to have the proof because they're allowed to ask anytime. But in general, they're going to take your word for it and let you take all of those wonderful deductions and only occasionally check up on you and see, okay, do you have the receipts and the mileage log that we require you to have for these? Okay. So bookkeeping is required simply to give you this wonderful benefit that you're entitled to. On top of that, Medicare and Social Security, you have to pay in to that same system that the employee does. And you are both the boss and the employee at the same time when you're self-employed. That's literally in the name self-employed, right? You're an employee of yourself. So you pay the employee half, 7.65% of your profit into Medicare and Social Security. And you also pay the boss half, 7.65 into your Social Security. When you add those two numbers together, that equals 15.3%. And that, my friends, that 15.3% of your profit that you pay in to the US Treasury every year, that is paying for your Medicare and Social Security. Okay? That 15.3% has its own name, and it's called self-employment tax. That's what self-employment tax is. It's the Medicare and Social Security payment. So Medicare and Social Security, self-employment tax, you owe that on 15.3% of your profit is going to go towards that every single year, every single quarter. And you haven't even begun to pay your income tax yet when you pay that 15.3%, right? That's only going to Medicare and Social Security. So in other words, you have to do bookkeeping in order to subtract out your deductions from your gross income to know what your profit is. Your profit is what you can think of as your taxable income when you run a small business, when you are self-employed. So bookkeeping lowers your taxes because it allows you all those deductions because you're tracking them properly. You can use a spreadsheet. You don't have to use fancy software, right? There's no requirement that you use this software versus that. A spreadsheet is fine. If you have a practice, like, for example, my painting practice, which, honestly just does not have that many transactions throughout the year, for 18 years of my painting career, I've used a spreadsheet for it. And I offer that spreadsheet in my program, Money Bootcamp, because it's really good. I've applied all the tax rules to it and I made it really simplified because, I like to be, honestly, I don't really like to spend all my time in spreadsheets. I would prefer to do the work once, set it up really, really well, and then just walk away and have it automated and not really have to deal with it too often. That's my attitude. Anyway, so essentially, what I want you to understand is that when it comes to doing your taxes, right, you might have both kinds of income. You might have self-employment income, most of which you probably will have reported to you on a 1099, but you might not, depending on how you earn that income. It might not come to you or be reported on a 1099. You still have to report it as your taxable income, right? It still will count in your gross receipts if you're earning it as a function of your self-employment. So be aware that you don't sort of get around the reporting requirement if you didn't get a 1099. So what's important here is that when you are doing your taxes, if you have a job where you're paid on a W-2, but you also have self-employment income, you need to keep those two things extremely separate. Okay. And the reason that those two things exist in different universes on your tax return is one of them, W-2 income, has all the taxes prepaid. And the other one, the 1099s, the self-employment income, doesn't have anything prepaid. And you have to do the math to show the IRS, okay, here's all the money that came in. We call that gross income. Here are all the deductible expenses. We call that deductible expenses. And then here's the difference. And we call that profit, hopefully profit, if it's a positive number. If it's a negative number, we call it a loss, right? So you report all of that on your Schedule C. And that's why all of your freelance, self-employed, small business income goes on a Schedule C. That's why we separate it out. And one of the key roles of a Schedule C is also to calculate the income you have that is subject to that 15.3% self-employment tax. It's the place where we apply that tax, okay? So I hope that that just gives you a little bit of clarity about why you need to be so crystal clear about when you're earning income, what is self-employment income, what is 1099 income, and what is taxes paid, easy payroll W-2 income, okay? That's why there is such a big, big difference between these two elements. If you get W-2 income, you don't get any deductions for that. So there's no bookkeeping. The good news there is there's no bookkeeping. There's no tracking needed. It's very easy. The bad news is no deductions. When you get 1099 or self-employment income, it's the opposite, right? The good news is you get deductions and probably a ton of them, right? It's a really generous tax benefit, but you have to track all this stuff and you have to pay self-employment tax on that profit. Okay. Lastly, I have a little tip that I want to give you. I really find that this little tip can help simplify your Schedule C filing, which, I'm going to be honest, I know it's the hard part of your tax return. That's why I built a whole program to teach you how to manage the Schedule C. But here's my tip that is for everybody listening. When you're reporting your income for the Schedule C, you're reporting your gross receipts or sales on line 1 of your Schedule C. What I want you to do before you get to line 1, I want you to separate out the gross receipts. I want you to take all the 1099s that you received that are a part of that gross receipts number. And I want you to add all the 1099 income together into one number that you're going to call income reported on a 1099. And I want you to subtract that out of gross receipts. So in your records, you have two numbers. And when you add them up, one of them is income that was reported on a 1099, and the other is income that was not reported on a 1099, okay? Because most of us are going to have both types. When you add those up, that should equal the total income you made in your business, your total gross receipts. And that number, the total number, that will be reported on your line 1 of your Schedule C. But the reason that I want you to actually do that little extra step of separating 1099 versus non-1099 gross receipts is because it will save you a massive headache. If you get a late 1099, and in this world, This happens. It happens all the time. And I'll tell you how it happens. Somebody thinks they're not going to have to issue 1099. Someone who was paying you didn't realize they had to send you a 1099, and they go to get their taxes done. And remember, this might not be an organized person. This might be somebody who is filing on extension, who doesn't actually get around to this until October, the extension deadline. And at that point, they go in and the accountant that they're working with or the tax software has this little, checkbox in the Schedule C. Did you pay anyone an amount over 600 for which you need to issue them a 1099? You have to check that checkbox. And then there's another question, and did you issue those 1099s you needed to issue? And you have to check that checkbox. So there's two checkboxes to make sure you did the 1099 filing you were required to by law. And there is no accountant whose license is valid in this country who will sign your tax return if you didn't file the 1099s you are required to file. And so at that point, that person who thought they weren't going to issue you a 1099 realizes they can't file their taxes until they do. And that person will send you a 1099 in October. And let me tell you what a pain in the ass it is when you get a 1099 months after you filed your taxes already, and it's already a done deal for you. Okay. So I always like to have a little pre-planning for that potential 1099 that comes in after I've filed my taxes. Grant you, I try to wait. If I think it's coming, I won't file. I will wait for the 1099. But if I just to keep, all my ducks in a row, I keep those two items separate on my Schedule C. And then what happens is when you get that inevitable letter from the IRS that you will get when you receive a late 1099, that letter from the IRS is going to say, oh, hey, oh, hey, we got a 1099 and we see that you didn't report it on your taxes, right? When you get that letter, it can feel scary because you're like, oh my God, the IRS is saying I owe more money, right? That's the knee-jerk reaction. But if you just take a beat and you think a little through what it is, you probably did. If you're following the law to begin with, you already reported that money. And it's simply part of that gross receipts line 1 number that's already on your Schedule C. And you simply need to pull it out and show the IRS, oh, that's a part of this income not reported on a 1099 number that I had pulled out in my records. You just want to showcase that. You say, I had not received this 1099. It was late. I already filed my tax return. I will now remove that from the not reported on a 1099 column, and I will move it over to the reported on a 1099 column. In other words, you just write them a little response letter that shows that to the IRS, and you don't owe additional money. You've already paid the tax on that 1099. You don't have to pay it again. Okay? So that, my friends, is a little trick that will help you when you have, people in your life paying you money in an informal economy who might not realize that they have a 1099 obligation, who might not realize it till late. And this is a way to save you a lot of headache if you get a late 1099 and you get that IRS hate mail that says, hey, we just got this report. We don't think it's on your tax return. And you have a way to say, yes, it is. And let me show you. Okay. So I hope that that is a really helpful tip for you. I hope that me clarifying the real difference between 1099 and self-employed income and how the taxes work versus W-2 income when you're an employee, I hope that's been helpful for you. I know that a lot of you are right in the thick of preparing your taxes at this moment, and I'm wishing you so much luck. Believe me when I tell you, I have experienced so much pain in my life over not understanding or knowing the rules about this stuff. And ultimately, I chose to go back to school to study it, to bring this kind of education to you. So I hope that tip really helps you. And if you are interested, if you're struggling, if you're feeling a little regretful that you didn't have things more organized before this point, and you're realizing maybe this is the year that you want to do better so that this pain doesn't repeat again, ever, you want to put some of these systems in place, like a nice, simple spreadsheet bookkeeping system, for example, you are welcome to just dip your toe in, come for a 1-hour free class that I'm offering on March 20th at noon Eastern. It's called Make Your Taxes Easier and Stash an Extra $130K in Your Savings. It's just a free class. I'm going to teach you some common myths about freelance taxes and things you can do, things that will help really, truly make your taxes easier. There's a lot of tips. Bring a pen. It's a very robust 1 hour of your time. I will also show you the math behind tax advantage retirement savings. It's a bit of my it's a bit of my hill that I'm going to die on. I want more creative people saving money for themselves. So I'm going to show you the math of why it's really worth it and really possible. And I'm also going to talk to you a little bit about my program, Money Bootcamp, what's inside it, how it's structured, how it gets you results. It's just a 1 hour free class. And if you want to join, you can go to go.sunlighttax.com/free and save your seat for the free class on March 20th. I hope I will see you there. And if you found this 1099 tip useful today, I'd love it if you share the episode with a friend who might need it. All right. I will see you next week, everybody. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.